Assalamu alaikum and very warm welcome to everyone. Thank you for joining us today. My name is Shakir Zainal and I am the head of Mohammed bin Rashid Innovation Fund, joining you for yet another insightful innovation journey session where we bring you a conversation with innovators. We deep dive into their experience, which turns to help others, founders, to learn how to accelerate their growth and maximize impacts. In the lead up to COP28, we have exciting lines of founders and entrepreneurs and pioneers in their own right ways, who are changing the world with their work in sectors like sustainability, clean energy within the region. This session will run as usual for maximum 45 minutes, of which first 30 minutes are usually allocated for the main discussion, followed by Q&As. Please type your questions in the comment section throughout, and we will do our best to pose as many of them as we can with today's guest during Q&A. So moving quickly on our guest for this episode, I'm extremely pleased to introduce Walid, Faza, partner and co of MSA Novo. Walid has 14 years of experience in the region, venture capital industry. Walid also played a vital role in helping startups and entrepreneurs to expand and thrive in their respective markets. Beyond advisor capacity, Walid also oversees investment partnerships and operation of MSA in emerging technology market. Let's extend a warm welcome to Walid and let's dive into his journey. Walid, Assalamu alaikum.
Alaikum assalam.
Warm,
thank you so
warm
much,
welcome.
Sayyid Shakir, and thank you for having me, and very excited to be here with you.
Great. So, Walid, from what I heard, and I've been reading, mashallah, you had a very solid experience when it comes to your career, and you have almost solely dedicated your time in helping entrepreneurs to succeed, which is a fantastic cause. And we need more of you, by the way, Saad Walid. So can you please walk us through your professional journey from where you start out to your current role at MSA Novo?
Absolutely. Once again, thank you so much. I think it's so important for us to have these discussions, to hear questions, and I urge everybody to send their comments and their questions on the chat so that this could be a fruitful and impactful discussion. Venture capital wasn't something that when they asked me if when I was a kid, what I'd like to be when I grow up, I did not say venture capitalist. I did not know what venture capital meant. It was not something that I always aspired to be. It actually happened haphazardly, and I almost, luckily fell into it. I did my undergrad in marketing in Canada. I got certified as an immigration consultant in Canada. I had passion in music and played music professionally for many years. So as you can see, none of this was investment banking. None of this was predetermined venture capital. But then I did my master's degree at the American University of Beirut, and I met an extraordinary entrepreneur that I think is very famous. His name is Mr. Fadi Ghandour. He is the owner and founder of Aramex. And his inspiration of what he does both on the financial side, the economic side, investing, growing companies, but also on the sustainability side and on the social side is extraordinary. So my journey started when I met him and he was having a talk about CSR out of all things. And I introduced myself and he said, would you like to have a cup of coffee with me? And I did. And 1 week later, he basically said, would you like to manage my personal investments? And I was blown away. And I said, absolutely. And from then on, this was 2009. Some of you might have heard of a company called Maktoob that got bought out by Yahoo for the tone of $160 million. And it was really a watershed moment for the MENA region, where international companies found value in the technology that was being built in our region and were acquiring companies. And that led to a series of exits that happened. We had Delivery Hero buy out a Turkish company called Yemek Sepeti. And then we invested in Su that got bought out by Amazon. We established WAMDA, which was a platform to talk about entrepreneurship. We had this fear of failure in our culture that we really needed to overcome, where we wanted to incentivize entrepreneurs to read about stories about role models, successful businesses that were able to raise capital in emerging markets and overcome the fear of failure. And that's where WAMDA came in as a content platform. Today, WAMDA offers a lot of data and insights on everything that's happening around entrepreneurship in emerging markets. We then established the WAMDA Capital Fund. It was a $70 million fund. And that invested in companies up to Series A, up to $5 million. One of those companies was Careem, which got out by Uber for $3.2 billion. And finally, the governments of the region, the private sector of the region, the family offices of the region woke up and said, there's an asset class here that is valuable for us to nurture, to invest in, and to grow. And that happened over the course of my career, which was around 14, 15 years. Back in 2019, we had several regional venture capital funds in the region, and we were all collaborating with each other and trying to build the next unicorn in the region. And there was a lot of focus on Silicon Valley, and there's a lot of focus on the States, because entrepreneurially and venture capital, from venture capital perspective, they are the benchmark of success. Venture money coming in, building companies, scaling companies, exiting companies, and then having all the capital and the returns come into the market and into the different markets. However, there was very little that we were looking at, and I'm generalizing, looking eastwards, looking at what's happening in India, look at what's happening in Indonesia and Singapore and China. And I was very intrigued about what was happening there. I felt that a lot of our founders in the region, when they were building companies, they didn't have the same foundation that if you would build a company in North America or in Europe. if you built a company there, you kind of knew who was going to acquire you. You didn't have to deal with logistics problems. You didn't have to deal with payment problems. You didn't have to educate people. It was kind of an ecosystem that was ripe for venture capital. But when you came to the Middle East and you came to our part of the world, you really needed to build a lot of, rails, groundwork to be able to grow venture capital. And I felt what was happening in China and in the East, was able to do that very, very quickly. And perhaps that technology could adapt to our part of the world better than what we see in Silicon Valley. I remember early on, I had entrepreneurs come up to me and value their company based on Facebook likes or how many views they had, or, that kind of valuation may work someplace where, those metrics work, but definitely would not work at that time in the Middle East, and probably not today either. So that was the impetus of me looking eastwards and then joining MSA Capital as a partner. MSA is a $2 billion has $2 billion of assets under management. They have 4 funds, and they have been investing in all of the sector leaders in China, whether that be in robotics, last mile delivery, deep tech, gene sequencing, electric vehicles, etc. We decided that we wanted to start investing from a Chinese lens, meaning mobile first, business playbooks that work at scale into emerging markets. So we established a $200 million fund with a lot of the sovereigns from the region, and we started to invest in a global emerging markets venture capital fund. So far, we have 48 companies that we've invested in. And, my day-to-day includes meeting incredible founders, listening to incredible ideas and technology, supporting them whether we invest in them or we don't. And, I'm happy to have sat on boards of many companies and continue to support entrepreneurs in everything that I do. So that's a brief history of my journey, and very lucky to be at the right place at the right time, and having as much impact as possible. I thought to myself while I was going through this journey, how could I have maximum impact with who I am and what I and it really is being able to empower entrepreneurs who are changing the world, giving them capital, helping them scale and grow. And I feel like the spillover effect and the benefits has been fantastic. And I think there's a lot more to come.
Fantastic. I think that's extremely fascinating. Walid, with 14 years of your career, how have you seen the region? With what I was just listening to you, I'm thinking, you have a vast experience in the region. So how is the region evolve when it comes to venture capital or even risk appetite? Is there any particular change that stands out in your mind?
Absolutely. I mean, back in 2009, when I started doing this, it was a wasteland, meaning, people invested in real estate. People invested, in assets that gave back, that what you were getting back. Also, the mentality back then was such that family offices that brought big brands or invested wanted majorities. The style of investing was completely different from where it is today. And I think we've been able to educate the market. We've been able to bring in capital in the market. There's a lot more skill and talent in the market, and a lot has changed. So if you're fundraising in 2009 or 2010 versus 2022, 2023, it's an incredible shift in what has happened from an educational perspective, from a skill set perspective, and from a funding perspective. So I would imagine in 2010, you'd have to go and shyly go and ask your dad or your uncle for some money, and God forbid, if you lost that money, you would become the black sheep of the family and become excommunicated, and you would be a disgrace, and things wouldn't work out. There weren't any bankruptcy laws that were around. There wasn't any venture capital or any accelerators or incubators that would take you in. Today, take your pick. Today, we live in an incredible time with so much opportunity and so much awareness. We have family offices coming in, creating funds. We have corporates coming in, creating funds, sovereign entities coming in, creating funds, accelerators the way that you want. I mean, we're in a very, very fortunate time and space. And the Mohammed bin Rashid Innovation Fund is a testament to that. They're on their 8th cohort. You can get debt financing. Imagine, I mean, the concept of debt financing just up until a few years ago, if you were a technology business or doing anything, you went to a bank, they would ask you for collateral. You'd basically have to, bring physical assets or put your name on the line to be able to do something. And what I've seen is there's been a tremendous shift. I think it's all been positive. I think there are many ups and downs as we trend, but the trend is moving upwards in a very positive way, such that you have people that are leaving their jobs, their careers of 10, 15 years, and starting their own business, which I think is fantastic. I also think that there's a long way to go. So I'm not saying that we're there. I'm saying that we've made great gains. And I think specifically when we talk about the sector of sustainability or green energy or even edtech, there's a lot that needs to be done. And I'm alluding to some of the problems that maybe some of the audience has in terms of regulation, in terms of funding and infrastructure. All of these things, we still have a long way to go. So we're definitely not there, but there has been a paradigm shift in the funding platform and in terms of venture capital, specifically in the region.
Okay. It's a year of sustainability, and we're all now geared up. We're already actively involved in COP28, and it's by end of this month. And we're aiming to net zero, sustainability being the talk of the hour. What is, in your opinion, are the specific challenges or opportunities that entrepreneurs should capitalize on a sustainability sector?
So I'm going to take a step back. I'm going to explain to you risk and return and what a life of a venture capital person looks like, what my mandate is. Because I think if you understand what my KPIs are and what my mandate is, it would make the relationship between entrepreneurs in whatever sector they're in and the VC or their funder or their investor much clearer. So as entrepreneurs need to go out and fundraise for their baby, for their idea, to get things up and rolling, same thing when it comes to funds. So funds don't have a magical ATM machine or a bank account that's evergreen, that you just pull out cash and you give people who you want. I think there's a lot of misconception in terms of, the investment that's there and what it entails. Like you have to go and fundraise, funds have to go and fundraise. Funds have to go to what we call limited partners, LPs, other investors, and tell them our thesis. And we basically have to convince them that them putting their money with us to get a certain rate of return, which we'd like to get 25 to 35%, annual return to give these people money back, or else, they can just park it someplace else or they can buy a real estate with it. So we have to have a very compelling thesis for our fund to go and fundraise and then be able to deploy that capital strategically so that we can make our funds back and we can give it back to our investors. So it's a full cycle. It's not that I'm sure a lot of entrepreneurs will hear negative, they will say no. A lot of investors will say no to entrepreneurs. And it's important that entrepreneurs don't necessarily take that personally. They have to understand the fund thesis. They have to understand, why this investor is investing in a certain sector or not, and what their mandate is in terms of returns. So, for example, let's talk about MSA Capital. MSA Capital wants to return 25 to 35% to their investors, which means we need companies that are able to scale very, very fast. So they cannot operate in one geography. They have to operate in 3 or 4 geographies. They have to be able to go and list as an IPO or to be acquired by an international company within a span of 5 to 7 years, so that we are able to return capital to our investors. I'm saying this because I think it's very important that you choose your investor very wisely and you understand what your investor is looking for when you do your research to go out and fundraise. Okay, that's number one. Number two is we have to look at the industries that are bringing the biggest returns compared to other industries. Let's talk about sustainability, because this is the talk of what's happening with COP28 coming, with green tech, with everything. It's difficult, but it's necessary. So I know that could be a little bit contradictory. It's necessary because it deals with humanity. It deals with the globe. It deals with climate change. It deals with, sustainability for the long term. We need to address these issues, and the sooner that we address them, the better. And I think nobody is going to disagree with how important this sector is and where we need to go. The issue is that it's not necessarily financially viable in the way that e-commerce was a few years ago, or maybe that gaming is right now. So the hot topic today for venture capitalists, and if you can put yourself in my position or in the investor's position, is where do you take your dollar today and invest it so that you can maximize your return within a span of 5 to 7 years? Sustainability, although is so important for the well-being of all humankind, it's not necessarily the most financially returning industry at this moment in time. I'm not saying that that's going to be forever, and I'm not trying to say that it's not a good time to start or it's not a great time to fundraise, but I'm just saying you have to be able to be very pragmatic about the different industries and where they are in their evolution. There will come a time where there will be more funds that are going to invest in sustainability, and there's a lot of pressure from LPs. So I know I'm diversifying and I'm talking about a lot of things, but I think this is very important. Today, when I went out and I fundraised for my fund, my investors came up to me and said, Walid, we like your thesis. We like this China angle that you're trying to do. We like the fact that you have a track record. We like the fact that you're investing in these different verticals. And just to be clear, we invest in logistics, we invest in consumer plays, and we invest in fintech companies, because that's what we feel is growing at the moment. But my investors came and said, however, Walid, we need to make sure that you have a developmental impact in the investments that you do, which means they impose on us ESG requirements that are getting much more detailed and ingrained day by day. So what does that mean? We need to be able to see, are we doing good in the investments that we are investing in? It's one thing to say, am I investing in things that are halal or Sharia compliant or that are doing harm to society? We will all agree upon that. But this goes infinitely deeper in terms of how is it affecting communities? How is it affecting the customers? How is it affecting everything that's around? And these ESG requirements were not there before. So for sophisticated investors moving forward today, this is very positive news for you, for the entrepreneurs, because it means that there's a level of consciousness and awareness that has risen into the partners and into the investors that are asking for investments that do good, are sustainable, and abide by these ESG requirements. So if I have two companies side by side, yours that is doing good stuff in sustainability or in green tech, or I have another company but has harmful waste or is doing something that is not positive for the community, I am incentivized, regardless if one is doing more financial returns than the other. I cannot invest in a company that is dumping hazardous waste or is hurting the community or is not doing good for its clients or its employees. And I must choose the company that is ESG positive for me, that I'm able to move forward. So we may not be at the tipping point of everybody putting money into green technology and sustainability in our part of the world yet. I think you will find it in other places. But what I'm trying to draw a picture of is that as the money trickles down from the investors, there is much more need and much more awareness and much more incentive to be able to invest much more into sustainability and into the kind of technologies that is going to save the world.
Thank you, Walid. Walid, from your experience, working with entrepreneurs and startups. Regulations, infrastructure, and funding. These are common challenges I think the entrepreneurs will always have and encounter. In your opinion, what does UAE and GCC get right, and what are they doing it right, or how can they improve it even further when it comes to these three challenges? I know there's a lot happening on regulation, and UAE has one of the best infrastructures. And funding, I will maybe you can elaborate more. Yeah.
So we don't live in a perfect world. We don't live at a time where all the regulations are there and all the infrastructures are there and all the funding is there, and that doesn't exist. So at this moment in time, I believe that the entrepreneurs are the ones that are spearheading the evolution of everything that's happening in business and sustainability and on a global level. It's the entrepreneurs that come up with the creative ideas. It's the entrepreneurs that push the envelope. It's the entrepreneurs that let the regulators come in and build the proper governance and structures to be able to create a level playing field for others to thrive and for the entrepreneurs to thrive, as well as the infrastructure. So I feel like those two components work very closely together. But the reasons why these things exist is because of the entrepreneurs. So I just want to praise everybody who is doing what you are doing, putting your life on the line, being a risk taker, and pushing the envelope to create the infrastructure and the regulation that needs to be there. I believe that the UAE today is living in a golden age. We heard what has happened in Western cultures and in different places. The Middle East today is living its best times. We are small countries, meaning in terms of time, we are young countries, and the ability for us to leap where we are today and do these incredible things is unheard of, unprecedented. The rate of evolution that is happening in our part of the world and in our country, in the UAE, is unprecedented and paramount to that. I mean, all of the people around the world are looking at what is happening at the UAE as really the model for the future and are incentivized to come, to set up shop, and to operate in the UAE. So I think you have a government that listens. You have a regulator that listens. You have young initiatives that are coming up, and this was unheard of 5, 10, 15 years ago. I know at least at my older generation, my fathers, my uncles, they did not have that. Today, we're on the forefront of cutting edge of what's happening, not just for our region, but on a global level. And I think the ability for government and regulators and infrastructure to take and learn and implement is like never before. Fine, good. That's all positive. That doesn't mean that we're there yet. And that does mean that there's a lot to be a lot of education to take place. And that does mean that sandboxes and accelerators and talking to the regulators is difficult. It's time consuming, but it's necessary. And you're actually building the foundation for the future. Let's talk about funding. I think it's unprecedented in terms of what we're seeing. If you read Magnet or WAMDA or any other publication in the region, the amount of funding that is taking place on a monthly level, on a country level, on a sector level, which has never been done before. So I think in my mind, an entrepreneur today is living the dream, trying to raise capital from our part of the world rather than any place else. There's no better time or place to be than to be able to do it right here, right now.
Yeah, so before we move to the question from the audience, I think maybe I will ask you the last question, and this has been always a question for all the people who have met on these episodes. So, if you go back in time, or if you go back to any point of time in your journey, what would you do differently?
Interesting question. Life is a journey, and everybody has their journey and everybody, I feel, has the free will to be able to open opportunities for their own journey. I've done a lot of decisions in my life that have served me, and those that initially did not serve me did end up serving me in a way. So I'm very grateful. I'm very optimistic about the way that I view my life. But I think if I need to be able to pinpoint something of value that I would have done differently, I didn't get the confidence in myself to go up and talk to people and be open with people and share connections with people till a much later stage in my life. And my lesson learned is that when I started to do that, I got luckier. The opportunities multiplied for me. And it's only because the person next to me in the elevator that I used to never be able to talk to or I was shy about, I started to actually say something to them, something remarkable, introduce myself, say, I hope you have a lovely day. Those connections miraculously turned out to be some of the best and smartest connections that I've done with people. So now, with my built-up self-confidence, I'm able to go and open doors and talk to people and interact with people and approach people in a way where I don't feel, shy or imposing or, I shouldn't do this or, just be reserved a little bit more. Those have really multiplied my value. And if not today, then in 5 years, in 10 years, in 20 years, I cannot tell you that the sum'at tayyibah in Arabic, which means your reputation, your good reputation, the way that you treat people, the way that you interact with people, your social capital that you have will come back many times, tenfold, and serve you. That is what has served me. And I wish I did it earlier. And I just implore everybody that can be, that is on this chat, to really open up, to really be vulnerable. Put yourself out there. Talk to people. Talk about your challenges. Talk about some of the stuff. The most successful entrepreneurs that we have in our funds that we've invested in are not the ones that show us that everything is great and give us presentations that they're hitting their targets, and then we don't listen to them until the next board meeting. The most successful ones are the ones that come up to us very early and are vulnerable and say, I think I have a problem. I think my CFO is, doing this. I think we need to hire somebody to do that. And those that are vulnerable are able to get solutions and build much better companies than the ones that think that they've got everything right. So again, that was a long answer. I would be more vulnerable and I would be much more open because I think that's really where the value comes in.
Great. So let's move. Maybe let's go to the audience and their questions. We'll start with Mohammed Nabil. How involved are you? Yeah, if you can, I can read it out. How involved are you in guiding portfolio companies towards successful exits?
Mohammed, thanks for your question. I want to say very involved, because you have to understand, when we come to invest in a company, we go ahead and do an Excel sheet about our returns and make sure that this company can be sold for X amount, and at that X amount actually falls under our exit return profile that we are comfortable with, and we need to help that company get to where it needs to go. So from day one, we are thinking, how can we as a fund help the company get to where they need to go in order to exit or in order to do their next thing. Having said that, it doesn't mean that we take control over the company. It doesn't mean that we are going to the driver's seat. It doesn't mean any of these things. It is the driver in all of this is the entrepreneur. The entrepreneur is the one that's most incentivized, and the entrepreneur is the founder usually, or the CEO of the company, that understands the market infinitely better than the investor. We are just one voice, one data point, along with others. The best entrepreneurs have already mapped it out. They know where they're going to fundraise next. They know which geography they're going to go to, and they know who their likely exit is, and they start priming their exit 5 years beforehand saying, I want to exit to Google. I'm going to start talking to their strategic marketing guy who's sitting here, and I'm going to do that, and so on and so forth, so that in 5 years' time, I'm going to exit it. Those are the entrepreneurs that do it. But yes, there's a lot of support from the investors that do it. We try to, create likable exits from very early on.
So we'll go to Sarah Zahtari. What initiatives or strategies does your firm have in place to promote diversity in the companies you invest in?
We're a female-led fund. So our founder is Jenny Zhang. She's one of the most prominent female investors from China. Our team is predominantly females. We are always looking at promoting diversity in everything that we do, both internally and externally. And it's not just gender-based. We believe that diversity breeds creativity and breeds much more efficiency in the long term. So, as I mentioned, we do have ESG and KPIs that we take a look at, and we follow trends in terms of the number of employees that each of our company has, the number of female employees that they have, which geographies that they are investing in, how many local talent they're bringing on. So we do map all of this data. And like I said in my example, we're much more likely to invest in a diverse company rather than one that's not.
Great. We'll go to Mohammed Ilyas. What are some of the mistakes you have made as an investor which have now become valuable lesson?
I used to think venture capital was for everybody, right? Everybody needs money. Money is good. You need money to grow. So therefore, it makes sense that we would give companies money and help them grow. That is a wrong assumption, and I had to learn it the hard way. Venture capital is not for everybody. Venture capital is a high-risk, high-returns game. If you want to open up a restaurant, if you want to open up a business that's a lifestyle business, if you want to open up something that is not going to jump 10x and have somebody behind you that is telling you, grow, 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 grow every day. I've broken the backs of companies, and I'm guilty of doing that as a venture capitalist. So that's some of the biggest mistakes that I've learned the hard way. I love the companies and the founders so much. I wanted to give them more. I wanted to incentivize them to grow. I knew that they could do it, but the market dynamics maybe was not correct. Or the business plan that they had was not venture capital friendly, which meant they could have been a great business if we didn't push them to grow 10x all the time. They would have employed 50, 100, 200 people. They would have made good salaries, good dividends, and they would have been a sustainable company. But if you come to venture capitalists and you go and start growing that way and scaling that way, you could break the back of companies, and I've been guilty of doing that. So that's a major lesson for me.
We'll go to Sarah Hassoun. Beyond financial support, how does a VC network benefit the companies that are invested in?
Financial support is really just the bottom tier of it, right? Money is one thing. You can get money through debt financing. You can get money through your rich grandfather. You can get money maybe through an investor that is hands-off. VCs are incentivized to help add and create value, which means what do we do? First of all, after you finish your round of funding, in 18 months or 24 months, you need more funding. VCs know other VCs and know bigger VCs and know private equity and know where to help you get more money. Sometimes they give you more themselves, and sometimes they help you fundraise in others. But I spend a lot of my time in a lot of the companies that we've invested in, helping them fundraise from other funds, bringing international investors in, and helping them grow. That's one. You need to hire somebody. You need a strategic data person. You need to hire somebody who is an expert in their field, but you don't have the network to do that. The VC usually does. And if they don't, they know networks that do that. So we help hire people all the time. VCs also sit on boards of companies, and they do conflict resolution, and they help you strategize on what's the best thing to move forward. sometimes not the best thing, but most of the time, I think they're much more aware of what's happening in terms of how best to take this model, move it forward. So yes, non-financial support is crucial in your decision-making and in a lot of the work that the VC does.
So we'll go to Zach Azhar. Where would you position companies involved in blockchain, crypto propositions in order to prioritize as part of your fintech portfolio?
Great question, Zag. 2-3 years ago, anybody who told me blockchain and crypto, it was a overused term, and a lot of people didn't actually know what it meant. And I think they were trying to build things with good incentives, but it wasn't true. So 2-3 years ago, we would have to go in and dig really deep into the tech and really understand what their value proposition is, and actually if it actually works, because a lot of what we got in terms of blockchain and crypto were pies in the sky, where this is how we want it to look like in the future. Okay, but the rails aren't there, the regulation isn't there, the fundamentals are not there. How do you want us to invest in something that is not sanctioned by some of the governments that we are operating in and by fintech regulators? So it's been difficult. And then after the crash happened, it's been less illustrious to go through that. However, we do have blockchain and crypto investments, and we will continue to do so. So from our perspective, we think that these are very viable business models, building slowly for the future. We will take risks and invest in some of them, as we have done in our portfolio, but we will continue to be very diligent in our tech due diligence and in our commercial due diligence as these companies start to grow.
So we'll get to this is the last question, and it is from Mohammed Hadi. Could you discuss the key differences in investment challenges and criteria across various funding stages, from pre-seed to Series B and beyond?
Key differences in investment challenges. It's easier to raise $500,000 than it is to raise $500 million. So you have a quantum issue, but each stage of your successive round of funding has each of its challenges. We say friends, families, and fools in the early stage. Maybe you have incubators and accelerators and angel funds, and then you have pre-Series A or Series A funds, and then Series B funds, and they all look for different things. By the time you reach a Series A, you need to have but a very good, tight product market fit with a very clear idea on how you're going to scale that business. Series B is usually big bucks to scale and to move it forward. You don't have to have that criteria when you come into seed and pre-seed, and you're building your MVP and you're showing that actually, there's a market for this and there's demand, and you're getting your first sales and your customers are moving forward. So we look at the criteria as completely different, and there are different investment challenges on each point, one of which is valuation. Valuation means how much dilution are you willing to take at different stages in your evolutionary ladder as you go on. So there's a lot of things to think about as you move forward. It's not one size fits all, but there are happy to speak about this offline if you need something very specific that I can talk to. Suffice to say, there are many key differences as you go up the ladder of investing.
Great, fantastic, Walid. Thank you very much. It seems that to be all what we have today. I think we're almost at 1:45. So I would like to thank you, Walid, for your valuable and vast experience and your knowledge that you have shared with me personally and the audience. MashaAllah alaik, So, and I want to thank you once again, and I thank everybody, all the audience who have attended. And inshallah, look out for any announcement because we do this regularly. So until the next time, inshallah, thank you very much. Shukran.
Shakir, thank you very much. Thank you, everybody. Bye-bye.